move. Cameron Brandt is with us, Director of Research at EPFR Global. Cameron, great to have you with us here. Good morning. Thanks for your time. I mean, just a quick word on what we saw last night. I was saying it's a bunch of things coming together, and there is that seasonality which I think everyone is talking about. But one wonders where was the seasonality last week? Because it should have worked last week as well. It did not. So what do you think really is the dominating driver, and where do we go from here?
I think that we're likely to go back to more benign scenarios. Certainly investors here in the US want to believe that they're going to have the happy combination of rate cuts starting in September and an economic landing that is soft rather than hard. As you said, not surprising that people came back from the summer holidays and things got a little bit rough. We'd certainly seen sort of an early run of that at the beginning of August. And NVIDIA has had such an amazing run. You had to think that gravity was going to claw back some of that amazing height that it had attained so far this year.
So, Cameron, hi. Great to have you on the show. So what's the sense? I mean, this volatility has come back after a couple of peaceful weeks. What do the flows indicate right now? Is money still going in US tech, or is there a change? What are the new patterns that you've seen in the last couple of weeks?
So, yes. So the overall pattern, as I said, is that people still want to believe in a tech-driven US soft landing that is given an extra boost by an easing cycle starting at the end of this month. And the recent flows have not capitulated, though obviously I've yet to see the data for today's action, which obviously could tell a slightly different story. But in terms of sort of the markets and themes that investors have backed consistently this year, for the most part, we're still seeing the money go there. That obviously includes India, while maybe not at the elevated levels we got used to last year and into this year. Dedicated India funds are still getting healthy inflows week in, week out. And the GEM picture, the diversified fund picture, is beginning to get better. The ones we track have posted consecutive weekly inflows for the first time since March. And the latest allocation data has India at a fresh record high. So if that trend holds, and I think it's likely given expectations for US interest rates, that's likely to give additional foreign support to the Indian market.
Okay, all right. Hi, Cameron. Good morning. Good to see you, Ben. So how do you compare the flows, in the recent past in comparison to what you say a month or so ago? I recall that when you joined us the last time around, you said the flows are pretty stable into India. Any change on that?
No, they remain really surprisingly stable. It was definitely a bit of a flattening as investors digested, I think, the potential tax implications that were buried in the budget. But for the most part, I think Indian equity funds, the dedicated ones, last posted a weekly outflow in the first quarter of last year. So it's been a tremendous run, and it really hasn't been threatened. There was 1 week where I thought the streak might end. But no, for the moment, the picture for India looks very good.
Cameron, any sort of noticeable changes in terms of flows going into Japan or the fact that there's been a very thin flow going into China? Any changes with respect to Japan or China?
Well, actually, good that you mentioned that. Yes, the flows to Japan equity funds have been perhaps some of the more volatile among the major geographic and single country fund groups. But before this call, I checked on one theme that we've seen over the past year, which is very strong appetite by Japanese investors for exposure to India. Japan domiciled India funds have had a very good run. And that run is still continuing. It checked at the beginning of this month, but has picked up again. So wherever it is that Japanese investors are rotating out of in light of the sort of somewhat changed monetary circumstances in Japan, it's not India.
Got that. Thank you very much, Cameron. You know, yesterday there was another article, or I'm not sure where I read it, but it struck with me. I mean, you know, chaps in finance are famous for coming up with all sorts of fancy descriptions to describe mundane things, right? So, for example, yesterday somebody said that the yen carry trade is like the San Andreas fault line.
Where did that come from?
That it's not done yet. That's essentially was the point.
Oh, okay.
That Japan is going to increase interest rates. It's going to continue to increase interest rates, even though they're in a bit of a hole because of what happened in early August.
Okay.
But it's coming. More is coming. And so it will destabilize global markets. I think it was... not sure where I read
So the
it,
interesting view, and it's a slightly contrarian one,
Yeah,
compared to the comfortable market wisdom that BOJ will stay on hold now that the Fed starts cutting.
No, yeah. So on hold till the end of the year because of what happened in August, because they don't want to sort of spark
Rattle
that
the
again.
markets,
But I mean, they're headed higher. That's essentially the view because inflation is back there. Well, Cameron, thanks once again. We'll take